Yeah, I can see it.
Okay. Okay.
Yeah.
Hey guys, and welcome back to
See that too.
the YouTube channel. Today, I am joined by the pro trader, Kanisa. What's up, bro?
Hi.
Okay.
Coming here with rubbish. But yeah, man, what's up?
Okay, so guys, today we actually took a loss on gold.
Beautiful.
This is just another side of trading, right? Trading is not just sunshine and rainbows. We do get days where we lose, which is completely normal. However, it's about how you come back from the loss, and every loss should be a lesson. You shouldn't take it as a loss. You see, you need to allow yourself to be a beginner to reach success. You can't just jump the ladder. You have to take it step by step. So, um, our biggest trade today was on gold. As you can
Mm-hmm.
see here, guys, um, we let me go down to the smaller time frame, what we saw and why we took this trade. Um, so what happened was on the 30 minutes or even the 1 hour, right? If you look to the left, look what we have here. Um, Major support line. Because why? Because look what happened here in the past. When the price reached this point, it rejected of it heavily and shot up. So usually that's a simple support and resistance price action. So we thought that now that the market has reached this point again, and it was obviously the RSI was also indicating that we are in an over sold market, and we are about to shoot up. However, that was not the case. Um, what happened was we scaled down to the 15 minutes, and I actually, oh, sorry, the 5 minutes, and we actually saw this pattern
Oh,
form. Remember
sorry.
the wedge? Remember the wedge we saw forming here? Let me
Yeah.
delete this just to have a cleaner chart for you guys. So we saw this forming, right? And obviously, when you see a pattern like this forms, usually it tends to break out, it retests, and then shoots up again, right? Now, in
Mm-hmm.
this case, it did happen, but only for a short amount of time before the market decided to reverse on us. Now, we all entered right here. We took heavy positions because we thought that we were very confident with our analysis and trade. Um, which you should be. You should be comfortable with your analysis because hesitation sometimes causes big losses. If you always hesitant about your trading, you're not going to go far in this. So we got our break, we got our retest. We're like, okay, cool. We jump in. We jumped in. Everything went smoothly. And then as this pullback happened right here, we all scaled in even more because why not? To make extra money. So we were up literally on gold. If I take it from the entry point right here to there, we were about 1,400 points on gold, guys. This is huge on a standard lot size. That's $1,400, right?
Mm-hmm.
However, we were targeting a previous, obviously a previous high, which is somewhere around there, correct?
Mm.
But there was so much selling pressure in the market that obviously could made continue the bearish market. Now, what we failed to do, and this is what I've learned from today's loss, is that we completely forgot about higher time frames, and this is why higher time frame is so important because smaller time frames, lots of noise, lots of fake outs, lots of more candles. However, if you go look at the weekly chart, what do we have here? We have a very clean bearish market. We have a high, a low, lower high, lower low, lower high, lower low, lower high, and so on. So we completely ignored all of that. We didn't even notice this. Why? Because we didn't even check the higher time frame in the first place to think like, okay, hey guys, we're actually in a bearish market. It doesn't make sense to buy in a bearish market, does it?
Mm-hmm.
So
Against the trend.
so from now on, I've literally wrote down in my trading plan uh, another rule, and I wrote down that I'm never ever taking a trade based on a smaller time frame. I'm always gonna do my analysis on the weekly, the daily, the 4 hour, right? And then only look for entries on a smaller time frames. Never look for a setup on a smaller time frame. Just look for entries on a smaller time frame. So that's what I'm gonna do from now on. I literally wrote it down. Um, So what I've learned from today is rule number one: never ever take take a setup based on a smaller time frame. Higher time frames only. If we actually looked at this, if let's say if we what do you call it? Let's say we're right here at the market, right? Where we thought we'd enter and take a buy. If I saw the markets and analyze the weekly chart, if you pull the Fibonacci from previous low to from previous high to previous low, look what we have here on a weekly chart, guys. A perfect 61% rejection. A rejected off once, a rejected off twice. Now, obviously, is going to drop down, right? Anyone would tell you that. But because we didn't pay attention to higher time frames, we got screwed over. So that's confirmation one. Confirmation two, obviously, bearish market structure is happening. If we scale down to the daily, which is a bit more in detail, as you see here, perfect market structure. I would have honestly, because the market was like there, right? And we saw this massive downtrend. We should have sold because there's so much and so much momentum in the market selling that a little buys, it's not, the market can sell forever and ever if it wants to, right? We can't just say, oh, it's a key level, it's going to reverse. No, the market can break any support line, any resistance if it wants to, right? And another reason, and another confluence that I didn't look at to give me more confluence is the dollar index. Now, usually what happens is when the dollar is doing well and going up, the gold is going down because people tend to move their money from the dollar if it gets weak and put it in gold, and that's when gold does well. And then vice versa, when the gold is doing when the gold is going down, or I would say when the dollar is strengthening in price, the gold is going down because now people are actually taking the money and putting it in back to from gold because it's getting weaker against the dollar. So people don't want to lose money, especially the banks, right? Especially the banks with their manipulation. So the dollar was in a very clean bullish market, as you can see here. Um, higher lows and higher highs. So we usually forget to pay attention to these details, which could really help us progress in our trading. So what I've learned from today's mistake is firstly check the dollar, see how it's doing, because if the dollar is strengthening, best believe the gold is weak is getting weaker and in a bearish market. So that's what I learned from today's trading, is that I'm never taking a setup based on a smaller time frame. That's just, yeah. From now on, the smallest time frame I'm gonna go to for a setup is the 4 hour. Honestly, I'm gonna look for 4 hour setups and execute on the 30 minutes or even the 15, even the 5. Doesn't matter as long as overall market structure is going bearish or bullish, and that's what I'm gonna base my entry on. So yeah, okay. So do you have anything else you want to add on, or do you have any questions?
Kamal,
Yeah,
quick question. So you telling me that trade that we took,
yeah.
you discovered it on the 5 minute?
We literally took it on a 5 minute look.
Really?
Remember yesterday when I sent you a picture of this pattern being complete?
Damn, wow. But it
Yeah.
looks so convincing though.
Hey.
It looked so convincing. But we were correct though. We were 110% correct. It's just we held on for too long. I think if we're going to trade against the trend for a bit, we should only be in it for a short amount of time.
Yeah.
I
Exactly.
think that needs to be known because we all thought it was going to go all the way up to that point where
I
the
mean, look
market
at this.
reversed. So
This
it makes sense that,
this was a 1 to 5.3 risk reward ratio, yet we still held on to the trade. Usually I tell myself I'm happy with 1 to 3 because that's 3 times the amount that I'm risking. So I don't know why I held long. I guess greed, when you see them profits just going up and up and up, you just don't wanna, stop it because you think that it's just gonna keep making you money. But no, this is why psychology is very important. And also, I want to add this from now on. From now on, my trading would be literally based on my risk reward. So the minimum risk reward that I'm going to be doing is 1 to 3, and the maximum is 1 to 4. I'm honestly going to stick to that because whether if I'm
okay, what if, sorry to interrupt,
yeah
what if you feel as if that this trend is going to continue? Are you still with this? Are you still going to be like no exceptions once I hit my reward level? That's it. I'm out. Or will you now just adjust your stop loss to the area of where you basically like completed your your trade? Do you understand
yeah
what I'm trying to say?
yeah okay, I got you. So I was going to actually come to this point. So what I'm going to do is, from now on, let's say I want to take a standard lot size right here. All right, let's say I want to take a standard lot
I
size.
see you there.
I'm going to divide it to 2 positions, which will be a 0.50 and a 0.50. Instead of one whole standard one position, I'm going to take 2 position, a 50 and a 50, and then let them both run, right? When the first one hits my take profit, whether it's a 1 to 3, 1 to 4, what I'm going to do is take my profits completely, but then the other position, I'm going to move my stop loss to in profit and then let it run. Because then if it keeps going, cool, I'm still making money. If it stops, I've stopped in profit as well.
Okay.
So yeah, that's what I want to do from now on. If I'm taking whatever amount of lot
I'm
size,
so sorry. I'm so sorry. Hold on. You know, black households. I'm sorry. Hold on. Give me 2
yeah, no problem.
seconds. I'm so sorry.
Household. So yeah, but this is it for today. Is YouTube for you guys. I just wanted to tell you that no matter how good or comfortable you are with your trade, sometimes it's just better to honestly take your profits and run away, because the market will not mercy anyone. The market is a vicious place, and you need to not to be greedy. You need to be happy with the profits you make. And honestly, I was today with my profits, I wiped off 2 weeks worth of losses, right? But greed kicked in with the amount of money that I saw. So yeah, this is my tip for you guys today. If you guys want to see another video on psychology and how to actually train your mind to help you train better, and not to let this happens to you, because this is how our setup looked like before. Let's say something like this, right? It never our take profits got never hit, and then what happens? The market literally reversed and completely wiped us out. So yeah, I hope you guys enjoyed today's video, and I will see you guys in the next one. Peace.